Hi, this is Mark Pizzacalla. Welcome to 3 Minutes with Mark. What I want to talk about today is rental properties, tenants' rights, tax implications for landlords. Now, you might say, what's so exciting about that? Well, you know, tenants' rights have been shifting. The sands have been shifting, and many of you may not be aware, but I'm sure most of you are, that they seem to be shifting towards tenants. And I've got a case that I came across that I wanted to run through, take you through it as an example, and also look at the tax implications. But in this particular case, we had an individual who wanted to bring his dog Elsie, a border collie, back home, was living with his mother, but wanted to bring it back home and live with him. And the property manager in this particular case argued that the dog could cause more damage than the bond would cover, and therefore shouldn't be allowed to bring it home. Of course, from the individual's perspective, he argued that allowing the dog to be at home with him improved his fitness, mental health, and living standards. Now, I never used to believe that years ago, but being a dog owner now, I can certainly, have a lot of empathy for that argument, I've got to say. But of course, from a landlord's perspective, they're not very keen for animals to live on the premises. But from a tenant's perspective, well, it's part of your family. And so that's really how you look at it. I know that's how we look at it in my family. So the other thing which was interesting that came out of all this was that 30% of renters nationally have pets. So this is something that if you have a rental property, you are going to come across. Now, look, it just means that there's going to be extra responsibilities for the landlords, particularly when it comes to fence maintenance. Now, they need to maintain their fences anyway, but of course, the tax implications, you're going to see that your tenants are going to be more vigilant. If they own a pet or have a pet, they're going to be way more vigilant about how the fences are maintained. So the issue becomes, from a landlord spending money on their fences, whether or not that's general repairs and maintenance or whether it's a capital improvement. Big difference. General repairs and maintenance just basically means, look, that's just wear and tear. You're replacing or repairing some parts of the fence. In those cases, you're probably going to be entitled to an outright deduction. Alternatively, if it's a capital improvement, usually because you've built a brand new fence, or alternatively, you haven't repaired some of it, you've built the majority of it, you've replaced it not with the same materials but with new materials. All these things come into play. And of course, if it is a capital improvement, you will be allowed a deduction, but it'll be at 2.5% per annum. And that's going to take you 40 years to recover the expenditure. So look, quite a few things to consider. Have rental properties gone to the dogs? Maybe they have in New South Wales, and maybe other states are going to follow. Look, if you have any questions, by all means, give me a call. Speak soon.